You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Tuesday, June 11th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story of the day is from investing.com. It's the top 5 things to know in the market on Tuesday. The first thing to know is China provides stimulus amid promises of firm resolve versus the U.S. Beijing signaled fresh fiscal stimulus for its slowing economy, announcing it would allow local governments to use proceeds from special bonds as capital for major investment projects. While traders breathed a sigh of relief as the U.S. opted not to proceed with tariff increases on Mexico this week, the U.S. dispute with China continues to simmer. The Chinese Foreign Ministry said on Tuesday that Beijing would resolutely respond and fight to the end if the U.S. insists on escalating it. The response came after President Donald Trump said the U.S. would impose further tariffs if no deal is reached in the G20 summit on June 28th and 29th. The second thing to know is the Fed expects to cut rates in July ahead of inflation data. With the Federal Reserve in a blackout period ahead of next week's policy decision, markets are convinced the U.S. Central Bank will need to cut rates at the following meeting in July. The ongoing Sino-U.S. trade tensions and a series of weak global macro data have steadily pushed up bets on an easing, and while expectations are for no move in June, Fed funds futures now put the probability of a July cut at nearly 80%. Policymakers will get a fresh handle on pipeline inflation pressures, or the lack of them, later on Tuesday. Annualized readings of the Producer Price Index out at 8:30 a.m. Eastern, that's out, are forecast to have eased in May. The PPI is considered a leading indicator as manufacturers often pass price changes at the factory gate onto consumers. The May Consumer Price Index itself will be released on Wednesday with economic forecasts pointing to a slowdown in headline inflation, while the core reading is projected to hold steady at 2.1%. The third thing to know is global stocks receive a further boost from Chinese stimulus. Global stocks moved higher on Tuesday as signs of stimulus in China enhanced a positive mood created by the suspension of tariffs on Mexico and expectations of Fed easing. Elsewhere, the positive close on Wall Street and Beijing's move to ease financing sent Chinese stocks soaring, with the Shanghai Composite ending up 2.6%. European stocks were also pulled higher. Germany's DAX led the charge, jumping more than 1% in a game of catch-up as investors returned to their desks after a holiday. The fourth thing to know is Amazon overtakes Google and Apple as the most valued brand. Amazon.com managed to overtake Google and Apple as the world's most valuable brand with a price tag of $315.5 billion, according to a global ranking released on Tuesday. The 2019 Brand ZTM Top 100 Most Valuable Global Brands ranking, compiled by WPP research agency Kantar, explained that the move was due to Amazon's smart acquisitions that have led to new revenue streams, excellent customer service provision, and its ability to stay ahead of its competitors by offering a diverse ecosystem of products and services. The report calculates that those acquisitions led to a 52% increase in brand value, moving Amazon from third place in 2018 to the head of the pedestal this year. The fifth thing to know is pressure on Musk to extend the Tesla rally. Tesla shareholders assemble for their annual meeting scheduled to start in Mountain View, California at 5:30 p.m. Eastern on Tuesday. While shares of Tesla remain down 35% year to date, they have rallied nearly 15% this month, including a 4.1% jump on Monday, as the market slowly digests $2.7 billion in capital raising last month. Ahead of the meeting, optimism is growing that deliveries are set to rebound in the second quarter, following a leaked Musk email that hinted at the company potentially exceeding its record deliveries in Q4 2018, while it delivered more than 90,000 vehicles. Our second story today is from Yahoo Finance. That's finance.yahoo.com. The fear gauge is sounding an alarm even as U.S. stocks surge. The author of this is Luke Kawa, who is a Bloomberg television. Here's the story. Remain vigilant. That's the apparent message. The CBOE Volatility Index is flashing even as cash equities race toward records. The VIX index, often referred to as the market's fear gauge, is up the past 3 sessions as of 1:40 p.m. In New York. At north of 16, it's implying that U.S. stocks will tend to move more than 1% per day over the next month. In recent years, it hasn't lingered above this level unless equities were weakening. The higher reading bellied the brisk advance of more than 2% for the S&P 500 index over the same 3-day stretch. It's the first time implied volatility has failed to decline amid stock gains of this magnitude since 2009, when the bull market was in its infancy. The two variables tend to move in opposite directions. During Friday's 1.1% advance in the S&P 500, the VIX, which measures the 30-day IV of SPX options, also moved higher. That's despite the weekend effect that typically sees the gauge move lower on Fridays and the passage of a market-moving event, the May non-farm payrolls report. This marked just the 11th time since 2004 that the VIX advanced while the stock benchmark rose at least 1%, according to Macro Risk Advisors derivative strategist Vinay Viswanathan. And our final story today comes by way of CMEgroup.com. This is by Eric Norland, another really great writer. Are US and UK interest rates about to converge? The UK and US economies look similar in almost every respect except one, interest rates. The Bank of England has short-term rates at 0.75%, while the Federal Reserve has them at 2.375%. Otherwise, both have exceptionally low unemployment, reasonably low core inflation, and an extremely flat Phillips curve. The Phillips curve states that inflation and unemployment have an inverse relationship, which imply that low unemployment is not generating inflation in either country. Neither nation has deleveraged its non-financial sector since the 2008 financial crisis, but they have delivered superior GDP growth when compared to the Eurozone, in large part due to the Bank of England and the Fed getting rates close to zero much sooner than the European Central Bank. So why have the US and UK monetary policies diverged so much in recent years? The one-word answer is Brexit. The uncertainty surrounding the UK's eventual exit from the European Union has prevented the BOE from following the Fed's rate path higher. There's a lot of truth in this explanation, as Brexit has weighed heavily on the BOE's rate path, but it is far from complete. The forward curves for SONIA and SOFR, the new post-LIBOR short-term interest rate benchmarks, show the UK and US rates converging by the early 2020s. On the one hand, UK markets see the BOE gradually raising rates, while US interest rate market sees the Fed actively cutting rates between now and the end of 2020. Basically, investors think that the Fed made a mistake by raising rates too soon, while they believe that the BOE, given its own situation, is basically on the right path. And that, ladies and gentlemen, is news you can use for today, Tuesday, June 11, 2019, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free one-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.